I'm joined by Minesh Bhindi. Minesh does a lot of stuff in options trading, and I know my community is always fascinated by this. I've never had the patience to actually figure it out myself. I've got private bank account where they have an options trader there who does everything for me. But yeah, I know lots of people like to look at this, and I know it's a great way of creating income. Yeah, I guess. What's your background? Because I know we were saying that just before we started recording this call, we've actually got quite a lot in common about how we got started and how we went on our various paths.
Yeah, so I started, I mean, the type of options that we focus on is really more long-term investing and using options to generate a cash flow. So the investments that we're focused on is gold, silver, real estate, and the stock market. But we just use options to not turn it into a boring old, 8% a year investment, and just figure out how to milk the cash flow from the volatility and liquidity of the markets. But yeah, I started when I was 16 years old, negotiating real estate deals. I know you started when you were 15, right? If I heard correctly on a video I watched. Yeah, so I was, my dad was involved in negotiating new build property deals. And one day I was just standing sort of in the hallway listening to him negotiate, and he put the phone down. I had this cheeky smirk on my face, and he said, what are you laughing at? And I said, that sounds simple, I could do that. And instead of telling me to screw off, which he would have been absolutely in his right to do so, actually I was 15 and a half at that point. He said, all right, well, show me then, so then I had to, by the time I was like 16 and a half, I had to learn how to talk to mortgage brokers, lawyers, prepare a deal, understand what a mortgage was, go and talk to new build developers. I didn't have the patience, as you can imagine, at 16 to deal with distressed sellers trying to sell their properties. But managers of new builds, yeah, I could put them over a barrel and negotiate pretty easily with those. So I started getting pretty good deals because I could just walk away, because my life was very simple. It's either we're going to do the deal or I'm going to go to school anyway and do my work. So I started getting really good deals, and then that transitioned to sort of selling those deals and learning how to speak on stage and teaching people how to do what I was doing. And that was, 14, 15 years ago now, something like that. Yeah. So what about you?
Yeah, so my background actually, when I was, I think my main reason for going to school was like that captive audience to sell stuff to, So I think my earliest kind of business memory was cutting down all the flowers in my mum's garden and selling them in jam jars outside the house. Yeah, when I went to school, I was always buying stuff and selling stuff and finding, like little micro businesses that I could do. And back in those days, there was this magazine, Exchange and Mart, that in the back of it, it had a stock section, which was like disposals of really random things, like 100 pairs of jeans or 1,000 Cadbury's cream eggs or something like that would be being disposed of. And so I'd buy these lots of stuff because, and then go and sell them at school. But pretty soon I was buying kind of blocks of stuff that was too big just for the school market. So I started doing like car boot sales at weekends and then a market stall at the weekend. And by the time I got to about 15 years old, it was a pretty fully fledged business. I was actually wholesaling to other market traders and breaking bulk. I figured out if you buy 10,000 of something, you can get it a lot cheaper than buying 1,000 of something. So I'd sell 9,000 to other market traders and sell 1,000 myself. That kind of idea was mainly in kind of watches and jewelry at that time, and just decided that I would leave school at 15 and go and pursue that as my business. So I finished my last GCSE and just walked out with about 40 untaken detentions, which was quite good. I figured out if you don't go, they could just give you another one and you just leave with a whole load of them not taken. So I was really lucky as well, because both my parents were actually the first kids in their families to get degrees. So they were very traditional education focused. It dragged them into the middle classes, and they felt that was a great way to take us forward. And they let me leave school at 15 and go and pursue this kind of dream. And I only found out probably a couple of decades later that they'd actually met with a school careers advisor at the school. And he just said, Jeremy's the only child in entire history who sat down and gave him a 20-minute presentation on exactly what he wants to do with his life. He said literally every careers conversation starts with the kid going, don't know, and kind of doesn't go much further than that. And so the fact that there was this person that actually seemed to know what they wanted to do, perhaps I should just be let alone to go and do it. So I probably got that careers, although I don't even remember, that careers guidance counselor to thank for, not having to go through another 7 years of education and university and all of that stuff. In fact, I was into the Daily Telegraph once, and they asked about university, and I said, I think the only reason to go to university is to learn how to roll a really good joint. And
the girls apparently. I didn't go to university either. I dropped out after A levels in the UK, so it was like, and I have Indian parents. So take all the pressure that you had and multiply it by 5, and then deal with a mom that's crying almost every weekend because you chose not to go to university, and I had to fight against all of that. So,
you're not a doctor or a lawyer. You're such a disappointment.
Exactly. And it was only, I think it took, the moment where her perspective changed was after I spoke at an event at the O2 Arena in London, where Richard Branson was also speaking, and she attended that event, and she went, all right, I think you might have made the right choice. This was years after everything else.
Well, it's really funny because my career went on a sort of, I started lots of businesses, not massive amounts of success until I started a telecoms company in my late teens, and that grew very quickly. And then because that was growing quickly, everyone was trying to buy us. And that was kind of my first education on how to buy businesses, was being, people trying to buy my business. So I kind of saw that, these other people in action. But anyway, I acquired a bunch of companies, and I, went on this kind of M&A career, and I bought a seminar business. So you talk about standing on stage. I bought a seminar business that was quite well known in the UK. It was doing about 3.5 million a year in revenue. I paid £1 for it. It was a bit of a basket case. It hadn't paid half of its speakers. It owed them money, and it was like, they've been spending money in the wrong places. But anyway, I bought it just before it was about to do an event in Earl's Court, Olympia, for 1,000 people.
What year was this?
This would have been about 1998, 99, something around there. Okay. And so anyway, I was invited to come and speak at their, I think just to be nice to the new owner. They said, would you like to come and speak at the event? And I'd never really stood on stage and spoken to a large group of people. I'd done sort of networking meetings and things where you stand up and tell people about their business. So I was kind of crapping myself, So I said, I'll have the first slot on the first day, because it was a 3-day multi-speaker event. And I said, I'll have the first slot on the first day, because then it's out of the way and I can just relax. I'm not sitting at the back, panicking about this. And anyway, it just happened to be my parents' Ruby wedding anniversary, their 40-year wedding anniversary. So the first thing I did when I went up on stage is I had a camera. Do you remember cameras? So I had a camera and I put it on record, got everybody to stand up and wish them a happy Ruby wedding anniversary. So we had, I think it was, because it was the first slot, there was maybe like 800 people in the room at that point. I hadn't completely filled up, but still 800 people standing up, wishing them a happy Ruby wedding anniversary. And then when I went to their Ruby wedding anniversary at the dinner or whatever it was, I showed it up on a screen on the wall, and my mum watched really perplexed and was like, what do you do again? It was, because what I do was changing on a weekly basis, because I'd be buying companies, selling companies, and getting involved in so it was, quite amusing. But yeah, that standing on stage thing is really interesting, because it puts you in it's that credibility, I guess, that comes from it. But yeah,
I did that for 7 years, sort of twice a week, and I got to the point where, I think I got to the point where you talk about, so just anyone who knows me, that's also watching this, Jeremy's at the point where one day I would like to do what Jeremy does, which is buy small businesses, turn them around, make them better, and flip them, basically, right? So I do that in the stock market and with equities. Jeremy does that with small businesses, and there's a lot more potential with small businesses because they're much more, how can you say it? Like the growth factor is a lot more. It's not just growing at a standard, 8 to 15% a year, and the options are not. It's sort of capped what you can do safely. Whereas with a small business, you can grow that at 200x multiple if you find the right business, right?
Yeah, I think what you do is what you do with the money that you make from selling a business.
Exactly.
So
Exactly.
the key thing with wealth is I don't think you can really save your way to wealth. I mean, of course you can mathematically. You can you can take 15% of your salary and you can put it away for 190 years, and with compound interest, you can accumulate some wealth. But what really catapults people forwards in terms of wealth is capital events. Now, for most people, the capital event comes from perhaps buying a house when houses were cheap and selling it, 10, 15 years later. That gives them a bit of a capital event that they can deploy into something like you're doing and generate that income stream. And I call it escape velocity investing. So escape velocity is the speed you need to leave the Earth's orbit, and escape velocity investing is having enough income from your investment portfolio that you're not using any of your income to live off. You're living off your income from your portfolio, because as soon as you do that, then you break through and it becomes exponential. Your wealth very quickly snowballs up. So getting to that first million takes quite a long time, because you have living expenses that are constantly eroding your wealth. But as soon as you get to that 1 million, the step to 5 is much quicker, and the step to 10 is much quicker after that, because you get that escape velocity. But yeah, you need to create capital events. The only way I know to do that is real estate or business. Real estate, I think, has got a bit too saturated and is a bit overdone. Business is still a huge area that can work, but you need really specific skills for it. I've been doing it for 20 years, and I always joke that I know 10% of 10% of what there is to know about M&A, which is 9% more than most people. So that's my advantage, is that I just know that much more than other people, because I've just been around so many deals. But yeah, the key thing is when people look at property, they know that they put in some equity, they borrow some money, and they end up with a property. And the biggest mistake people do in business is they take the same approach. They borrow money from the bank gets personal guarantees, they end up buying a business. A business isn't like real estate, it's incredibly volatile. If you're not constantly in it and on it, it doesn't necessarily flourish, and then you end up getting called on your personal guarantees and getting yourself into a big financial pickle. So the key thing that we focus on, or I focus on, is asymmetric risk. So how do you do a transaction where you don't risk anything up front, and so you only leave room for upside? So take away all the downside, just leave room for upside. And then,
yeah, sorry to interrupt, but that's actually fascinating. And that's what people say to me, when we have clients sort of coming in and going, hey, I've done sort of trading before and I've lost money. And I go, yeah, but there's trading and then there's investing. Investors, the real wealthy investors are not taking risks. I have no idea who's put into the mind of people that successful entrepreneurs take massive risks. Like, that doesn't make any sense. Any successful entrepreneurs and wealth builders that I've met, their sole life purpose is, how do I reduce the risk in what I'm about to do, right?
Yeah.
And so, yeah, it's the same thing. Exactly what we do as well. We don't want to use, in the type of investing we do, we don't want to use any margin. We don't want to get you into a position where a certain move in the market and suddenly you're wiped out. So again, it's an asymmetric risk. I think that's probably one of the most valuable topics of understanding anyone can get when they're focused on making money and creating wealth. How do I reduce risk? That should be the number one goal.
Absolutely, cover your downside, and all you're left with is upside. I mean, Warren Buffett always says, price is my due diligence. So as long as the entry point is a no-lose entry point, because the assets are worth more than the price he's paying, then he's happy to buy as much of it as they'll sell him. And it's very much the same with small business acquisition. Most people think that in order to have a business, you have to start a business and then work really hard. And obviously that startup phase, that first 2 to 3 years in any business, is kind of pushing water uphill. It's not, you don't get that time back, and you don't often get that investment that you put in back. And then after that, you start to get some inertia and some growth in value. Basically, what I discovered when I had my telecoms company was I was able to buy a competitor down the road. It was a 13-year-old mobile phone shop, had 1,000 customers. We were connecting about 1,000 customers a year at that point. So we grew by a year's worth of sales in an afternoon by adding that company to my company. And we took no financial risk at all. We paid for that business out of its own profits over a short period of time after we bought it. It was a win-win deal with the current owner, so everybody was happy, and it was an asymmetric risk for me. And it was such an epiphany that was even possible, because I lived in the paradigm where you start a business and you work really hard. Now all of a sudden there was this new paradigm that you don't have to run the marathon, you can just run the last 10 yards and they still give you a medal. And that was just, yeah, a massive game changer.
Yeah, I think for me, I was pretty lucky because when I learned that was when I was buying property and negotiating these deals, and I would go in and get a 30% discount negotiated on a property, and then go and get a mortgage that was, you know, an instant remortgage on the day of completion with a 90% loan to value. So not only am I getting the property, but I'm getting, you know, 20 grand check on a £100,000 property as well at a very, very low interest rate. And so for me, it was, hold on, the property isn't even the game here. The game really is the credit cycle that we're trying to play here. So that for me, understanding that and realizing I could buy a property with £500 down on a deposit, and that's all I needed right up until, you know, the property was ready to let out. That's when I started understanding, like, why do people put in £100,000 into a property? This doesn't make any sense to me. So then I started adapting that to business. Every business I've ever started has started with less than 3 grand. It's shocking to me how many people think you need so much money to start a business. I just don't get it.
Yeah, and the one I see quite often, so I guess if my first epiphany was you don't have to run the marathon, you just run the last 10 yards, my first epiphany was acquiring companies. So I went on and acquired a whole load more and built the business up quite, you know, to quite a large level. We went from about $1 million in revenue to 13.5 million in revenue in about 18 months just through acquisition. So it was a really steep growth curve. But we also went from about 13 staff to 135 staff. So I went from, you know, a payroll this big to £250,000 a month payroll. And it was such a baptism of fire, you know, it was such hard work. But anyway, I sold the telecoms company, and that was the next epiphany. It was kind of like, you don't make money running businesses, you make money when you sell them. It's that capital event thing and that was when the penny dropped that, okay, instead of dealing with staff and customers, I should just buy and sell businesses. I can be a shareholder, not an operator. I don't need to go in and do what that business does on a day-to-day basis. I can just buy it and I can sell it. And that was a game changer for my lifestyle, because, you know, when you're running a business, you're immersed in the thing the whole time. Now I, you know, travel all over the world and live in lots of, you know, wonderful places. And I couldn't do that if I was tied to a business where I had to, you know, rock up there every day and deal with, staff and customers. I always say to people, business would be great fun if it wasn't for staff and customers. And then I'm saying that in front of my staff and my customers.
Saying that right on stage when you want to say, hey, can you please buy my book or buy my seminar? Yeah, that's fantastic. That's fantastic. It's really interesting to me that, you know, everything, it's always fascinating how the experiences that you have sort of lead to your development in the world, and you've sort of got the same result, but we've approached it in completely different directions. And I always tell people, you've got to be open to doing different things. And at the end of the day, there's a lot of people right now, because the world's doing well. You know, as much as we want to complain about different things going on in the world's much better than it was 20 years ago, right? And so people always get very comfortable. And right now, I'm telling you, there's so many opportunities around there in the world, whether it's cash you've got saved up, or whether it's, you know, an opportunity. I know people that are 45 years old that are quote unquote retired because of their property portfolio. It doesn't make any sense to me. It's like, use that talent, go do other things, create value with the experience that you've got. Like, you know, and that's why I wanted to really do this. I think it's a fantastic idea, especially we've got a lot of people that, you know, like you said, they've had that capital event. They're now investors. They're letting their money grow. They've got some form of passive income coming in, and they're sort of relaxing right now. But there's so much opportunity in the world. Like, I mean, if you could talk about that, actually, that'd be good.
Yeah, I'd love to also just say, you know, passive income is such a bastardized term.
Yes.
It's been hijacked by all these people selling you these, you know, internet marketing, like, you know, stupid online courses, or even, dare I say it, some of the trading, you know, systems, which it astonishes me that people believe that they can learn, you know, what a Merrill Lynch trader has spent 2 decades learning in a weekend.
You've got no chance. You've got no chance, because he's had, you know, £10 million worth of infrastructure around his building to get the internet connection so that it's half a second faster
than anybody else. Yeah. And And also, I mean, you're playing a zero-sum game. You know, with zero-sum, there's only a winner and a loser on either side of the trade. You're playing a zero-sum game with the greediest bastards on the planet. So, do you really want to do that? So, so it astonishes me that passive income thing has been hijacked by them. But I know option strategies because I use them in my own portfolio. But I tend to use them very similar to yourself in terms of the diversification. So. I actually don't do metals. I use metal as a base currency in one of my portfolios. So the cash is always sitting in electronic gold. But I use option strategies on REITs, on real estate investment trusts, which give me a real estate exposure, but a really high yield, really high income, and fixed coupon notes, which gives me a equity exposure without too much risk associated with big market fluctuations. So I'm very familiar that that's real passive income. That's how you really do generate a decent income, because if you just stick it into mutual funds or into dividend yielding stocks or REITs or things like that, the amount of income you can generate, I mean, if you do the maths, if you write down all of your living expenses and then you figure out how much you need to have invested to cover those living expenses based on normal retail banking, the numbers are astonishing. You need like 20, 30 million bucks deployed to have any kind of sensible income. But when you use derivatives, when you play around with option yields, 15 to 20% actually isn't that aggressive. I placed some options or some fixed coupon note trades right in the pit of the crisis, in the COVID crisis, where the yield was 116% unlevered, just on options contracts, because the market was nuts and they were willing to pay that kind of annualized premium. So there are some astonishing levels of income that you can generate by that. And I think it's really important to point out that true passive income is capital well deployed and deployed in a safe way. And then creating that capital, I think, is all about finding capital event opportunities. So how do you buy an asset that you can resell at a much higher price in a short space of time? What are the motivations that lead people to want to dispose of that asset in the first place? And how can you be sure that you can add that much value to it? And I guess that's the kind of the crux of it that I've kind of figured out. But I mean, your options trading strategy. So what sort of percentage is that returning, or has it returned historically? How did it cope with the big dip that we just had? And tell me a little bit.
I have a basic philosophy, and that is, I call it the wealth triangle principle, and it's very simple. Number one, you've got to buy an asset that's going to go up over time. The mistake that people make is that even when they focus on real estate, for example, they'll go buy real estate on a particular road or a particular city, for example, in the US, where the only reason that property has been going up in that area is because there's a factory that's there. And the moment that factory goes away, there's no growth potential for that area. So for me, using the real estate example, we use REITs as well. I don't understand why more people don't use REITs. It has no headache of management, no headache of sourcing deals. You've got the best nerds on the planet making sure that your property portfolio is performing the best, because if it doesn't, you're going to pull your money from them. Right? Capitalism works from that perspective. So we want to buy that asset. We know real estate's going to go up over time. We don't want to be leveraged in that. We don't want to be over leveraged. We don't want to use any margin. What I find interesting is people go from property where they're using a mortgage, and they're not a commercial mortgage, a buy-to-let mortgage or a residential mortgage, and then they go into the stock market and they think they can use margin. And that's mark to market every second, right? So, and they have this psychological battle with how the hell do I deal with that? So we keep that away from most people, from everyone actually. It's just not worth it. So the goal is you want to get into an asset that's going to go up over time. You want to buy it at the best price possible, if not below market value. And the good thing about the stock market is that when you're buying REITs and things, anything really via the stock market, you've got the true market value that's there. So as long as if you can write options to get into it at a lower price, you're ahead of the game already, right? Versus trying to buy gold from a dealer or something like that. That's sort of in London, for example, during this COVID crisis. Actually, it's a good point. All of the London gold dealers sort of started hiking their prices higher than the spot price, and it's like, well, how does the average person deal with this, right?
Yeah, it is normally 7% over spot, isn't it? If you just if you're buying it.
If you're lucky, yeah, if you're lucky, 7%. I know dealers that were charging 23% above spot.
Wow.
During this period. So we want to, number one step of this triangle is basically buy an asset that's going up in value as low as possible. Step number two is cash flow. And what most people don't realize is you can cash flow gold and silver. You can cash flow the stock market. You can cash flow real estate above and beyond. And it's funny because the only element of cash flow that most people know is property, because that's what they've grown up with and that's what they've been told. But, you don't see Goldman Sachs going and buying a physical real estate portfolio. They invest through a REIT because it gives them other leverage from an option perspective to generate extra cash flow. So you want to then generate that cash flow and maximize the amount of cash flow that you're getting. And the benefit of specifically with REITs, and in our program, you're obviously getting the dividend, which is like the rental income. You're getting the capital appreciation on the property, and you're then generating the options income, right?
Yeah, yeah. So you're selling covered calls above the price, are you? And harvesting a premium that way.
Covered calls and puts. But the main thing for us is really trying to figure out how do we lower the risk in selling a covered call, because the long-term goal of what we do is to own that asset. We don't really trade in and out.
Being triggered and having to buy it again, yeah.
Exactly. We want to own that asset. So the real trick, if you want to call it that, is figuring out how do we work out the risk element of each covered call or each put that we sell to make sure that we're not going to be exercised out of the position. And then number three is simple. To build wealth, you take that cash flow and buy more of that asset that's going to go up over time. As long as you get those three things rolling, it's very easy to do this. So our clients, we aim for 12 to 26% a year on their investments, and that's really all you need. When you work out wealth over the long term with a 12 to 26% ROI with a very low risk profile, like you said, like we started with the asymmetric risk, you really don't need much more than that to really retire on a large pot at the end of it.
Yeah. No, I would agree. And then if you can, just rocket propel that with some capital events along the way. I think Tim Ferriss always talked about those mini retirements. In the 4-hour work week. So you have these periods of heavy, highly intensive work, and then you have these sabbaticals. I would kind of look at that in the same way, from a wealth perspective, that every few years you should be having a capital event, which then adds to the pot, which is a significant driver of wealth. I mean, obviously, if you're really active and flipping businesses, you can do that several times in a year. But even if you just had it every 2 to 3 years, it would have such a significant impact on your income and your overall wealth over a lifetime.
That's the thing people don't understand. I mean, my clients look at, for example, me, and they go, "How is Minesh propelling so much?" And it's because I started when I was 15 years old with a business. My DNA is business. The investing stuff I find actually pretty boring because I figured it out so quickly and it's so easy to me. So for me, it's all about, like you said, those capital events. What can I do? My brain's always working on what can I do to create assets that create, value that I can. Right now, I'm not selling them on because they're all based on me as a brand. But how can I continue to create capital events so I can funnel more money into my investments? The worst position I think to be in is where you are literally living off of the profits of your investment portfolio. I think that is the worst thing, because the compound, you get rid of the number one asset you've got, which is the compounding effect. Right? So that's why I think anyone who's like 40 to 60 years old, who's had a business, had some previous experience, I mean, you should be taking that time and experience that you've got and start figuring out how to create some more, like I said, capital events, whether it's buying and selling businesses, whether it's having a business of your own, whatever it is, because what else are you going to do with your time? It's one of the reasons why I'm not a fan of the universal basic income idea that we've got going on in the world right now. It's like, what the hell are you going to do with your time? Your brain's going to go numb at that point.
Well, I love the idea. I think we could create a lending product where we basically turn around to somebody that's got universal basic income and we say, we'll give you 100 grand cash now. You just sign over your universal basic income for the rest of your life. So,
oh my God, you're a shark. Look at you. There's that hustler mindset just came out right there.
But that's what happens. Like, the old adage that if you take all the money from the rich people and you give it to all the poor people and then wait 5 years, all the rich people have it back. Exactly. Because it's the mindset around, attracting wealth and moving things forward. So yeah, I'm being slightly facetious, but that's always my argument against UBI, is that it will get, it will get cannibalized by the financial services sector very, very quickly. It'd be great sales of big screen TVs and cars and things like that, just like the bounce back loans are right now. Car dealers must have queues of people buying Maseratis and BMWs and stuff like that.
It's shocking. It's shocking to me. I wonder how many people are going to take their bounce back loans that they get and actually turn it into an investment or do something productive with it. It's fascinating.
I hope more, but I doubt it.
Me too. So what's the way to look if you're like, for example, I'll tell you the position that most of my clients are in, right? They're very comfortable. They've either got a job that they're sort of doing because they're in that sort of zone. They've got financial assets. It's growing. Their portfolios are growing. What's the first thing to do to sort of step into this world that you're in?
So I think, look, like everything, it's about learning the framework and how it all works. There's an intellectual aspect to this around just understanding how everything works. And so the first thing I would advise is obviously educating yourself on the topic. Now, the challenge with educating yourself on the topic is that most of the books and the courses are either written by advisors who are trying to sell you advisory services, or by brokers who are trying to convince you that business brokers are the best thing ever. And by the way, never buy a business from a business broker, or unfortunately, like every kind of thing out there, there's all these kind of the seminar type businesses that have sprung up where the person has no experience of doing what they sell. They just teach people for money, and you can normally spot them because there's this massive upsell that you have to buy to actually get what you want. So they get you on a small fee up front, and then there's a really big it's painful. So so the first thing is educating yourself. I'm trying to democratize that a little bit. I always, because I do actually run a training program which is a membership community around doing deals. It's fairly sort of high ticket and exclusive, but I am trying to democratize the information out there because I think it's very valuable. So I have put it into a book. I actually wrote the book 2 years ago and just kept it exclusively for people in my community, so as something they could read. But we've decided we're going to publish the book in December. We've always had this kind of paperback version of it here. It's called Go Do Deals. My first book was called Go Do, so hence Go Do Deals. But we're actually doing a hardback, like first edition version that we're going to launch in December with a big sort of razzmatazz. So if anybody wants to find out, they can of course buy this book. You put yourself down on the waiting list that will get delivered in December. But obviously, when you release a new book, it's nice to get on those bestseller lists. So we're trying to get as many pre-orders as possible because that really helps with the bestseller lists. So to really incentivize it, what we've done, we've taken a whole bunch of our course content, which people normally pay thousands and thousands of pounds to come on, and we've turned it into a 21-day email course. Now, we were going to sell that as a separate product, but to help the book launch, we're including it with pre-orders for the book. So if they go onto my website, which is just jeremyharbour.com/go-do-deals, you can buy the book, which is only, I just don't know how much it is. I think it's about $25 or something like that.
It's insignificant for the information.
It's not expensive. So it's about $25 or something like that. And you'll also get enrolled in this 21-day free email course. And it is genuinely, it teaches you a whole bunch of stuff around motivations, how to source companies without using business brokers, how to hold a meeting with business owners so that you can create a win-win deal. There's some example deal structures. There's what to do in terms of turning the business around, how you sell the business, all of those kind of things. There's some really clever little techniques and tactics in there. We don't teach the kind of theory that you get from normal kind of books or MBA courses and things. We teach kind of the in the trenches tactics around how to get started. So yeah, if anybody really does genuinely want to learn about this, there's tons of free content on my website anyway. But if you want to buy the book, you'll get a really good taster over a 21-day period of all the warts and the wrinkles and how it works, and figure out if it might be something for you. And I mean, in terms of my community, quite often they're selling businesses, they're having capital events. We obviously recommend private banking. Private banking kicks in at 10 million net worth. So we have a lot of people on that journey who would love to get access to some of the kind of income levels that the private banking community get, but perhaps, just before that. I mean, what is the sort of starting point or entry point for how much do you need to have to invest in an option strategy to realistically start making it work?
Yeah, I mean, I like to tell people to come in with the intent to invest at least $50,000. So it's super low. The average client ends up investing about 250 to 300,000. But you can actually test the strategy with $5,000. So there's not much risk involved in that. But yeah, basically what we do is figure out how do the people that have private banking, access to private banking facilities, because those people are not people that are investing in hedge funds. Hedge funds are the people that sort of take the quote unquote dumb retail money and try and rape it for as much as they can. Private banking is a whole completely different world where you're actually getting the benefits of financial services, right? So we try and take that middle road somewhere between 50,000 and 10 million and try and show people how they can generate those results without having access to the private bankers that could do it. Because really, the fees that are involved with private banking, it's not worth it unless you've got that much money. That's why that's there. So yeah, that's what we aim for, and anyone can come and check out any of our programs. You just got to go to perfectportfoliollc.com and have a look.
So perfectportfoliollc.com.
Yeah, that's right. Yeah.
So LLC, so a US company.
It's well, it's not a US company, but it's set up for tax advantages. Yeah.
Right. Okay. Yeah. Okay.
That's the number one thing, right?
Explain yourself.
that's the one. That's the other. Yeah, that's the other important thing. Like people don't understand how much tax actually has an impact on the amount of wealth that you will keep.
Yeah. It's astonishing, because in Singapore we have luxury taxes on things, but it's all consumption taxes. So what you spend. So a Ferrari in Singapore is $1.6 million. That would be £200,000 in the UK. But actually, if you do the maths, the Ferrari is the same price because I got to keep all my money in the first place. And so before I went out and bought before you go out and buy the Ferrari. So it's just which end of the chain you get taxed on, and it does make such a big difference. Actually, do you know what? I was actually looking at the Sunday Times rich list the other day, and I saw the entry point is about 130 million for the Sunday Times rich list, and basically, if you figure out in the UK how much you've got to earn in order to get on there, I mean, particularly now that they're removing entrepreneurs relief and the capital gains tax is now the same as income tax. You figure out how much you've actually got to earn to get 120 million in wealth, and it's it's astonishing. If it's generated within a business where effectively you're double taxed because you have corporation tax, and then your dividend taxes on top, or capital gains tax if you're selling it. It's an astonishing amount of money that you've got to create just to get in that same place. And I'm actually tempted to try and model it to show, if you were doing one capital event a year and it was a 5 million exit, how long it would take you to get on the Sunday Times rich list in Singapore versus the UK, because that compounding impact would just be, a game changer in terms of the timing. I suspect doing 5 million a year, I suspect you couldn't do it before you die in the UK, and you've got quite a short space of time.
which is why I'm actually excited about Brexit, right? Because once Brexit happens, the UK will be forced to become competitive. So it's going to be really interesting to see what happens from a tax perspective after December of this year. Because I think the first thing they're going to do is lower capital gains tax and corporation tax. And if we can get that down to closer to that sort of 12.5% that Ireland has.
Ireland rate, yeah.
I mean, who the hell wants to go to Ireland when you can go to London for 12.5%? So that'll be the end of that tax advantage over there in Ireland. So I'm looking forward to it. And the capital gains is just it's ridiculous. I don't understand how we can get away with the 20 and the 20%.
Capital gains is a regressive tax because it makes entrepreneurship zero sum. Entrepreneurship is really, really hard anyway. Most of the time you fail, 98% of the time you fail. And what a capital gains tax does is means that you also kind of fail if you succeed. So you lose everything if you get it wrong, and you lose half of it if you get it right. So it's It's not, and by the way, getting it right is, 2%, the 2%, and 98% are getting it wrong. So it's really regressive. It really does put people off starting things and doing things in the first place, because why bother,
Exactly. And all of that has been forced on by obviously the legislation that's happened in Brussels. So it's super interesting. I mean, one of my investment companies is in Singapore anyway. So I love the tax advantages that Singapore has. And I think the first thing actually anybody should do is figure out the tax situation, because once you start making money, if you're just dabbling in things, then fair enough, go ahead and do it. But if you're serious about something, figuring out the tax is the number one goal.
Yeah, and governments have got real headwinds around how they're going to deal with all this post-COVID stimulus, and how they're going to rebalance their books, and the pressure for things like UBI and all that sort of stuff that's going to come on as a result of this, and the fact that the baby boomers are all retiring. They're going to stop paying tax soon, and they're financing everything right now. Well, they're not financing everything; they're financing 70% of it, and the other 30% is debt. The government is borrowing to meet the shortfalls. So take them out of the equation. If they're not paying tax anymore, there isn't enough to go around. It's the whole economy is a Ponzi scheme. So it's
yeah, it was, actually based on what you just said there, where it was shocking to me how many people thought that because of the coronavirus, the stock market going down, the whole world was going to melt. When 70% of US income is controlled by retirees. Who cares what the quote unquote unemployed 30% are doing, because the spending is still going to happen because they've got fixed income, right? Yeah. That's always going to continue. So it was very shocking to me that everyone I told my clients, you need to buy and buy more and keep buying, because this is going to bounce back faster than anything we've ever seen ever. And look what's happened.
Yeah.
So yeah, it's super interesting. So the only other question that I had was, if someone who is obviously goes and checks your book out, goes through the course, and then sort of doesn't want to really do it themselves, do you have like a fund or anything like that
we don't so much. I mean, one of the big strategies that we push right now, and this is more around trying to help small businesses access capital, is we put groups of small companies together and take them public. So, for example, we listed a company last year. It was actually the third fastest growing small cap company in the whole of Europe. It's called MBH Corporation PLC. It basically went from about 10 million revenue to 100 million revenue in its first year. It's called MBH Corporation PLC. The ticker's M8H. If anyone fancies checking it out, that's kind of probably the most passive way to tap into what we're doing, is to own that. It's a dividend-paying stock. It's very fast growing. It grew, like I say, very exponentially last year, and will continue to grow through acquisition, because that's our core kind of competency. And
that's listed.
It's on the Xetra in Germany, so the main market in Frankfurt. It's a UK PLC, so from a corporate governance perspective, it's the UK. But yeah, we listed on the Xetra because it has quite good liquidity and good trading platform.
Yeah. I think that's the one thing that's interesting about what you do, is you're basically trying to bring sort of what big finance has been doing for ages, which is bringing liquidity to the S&P 500. You're trying to bring liquidity to small businesses.
Yeah, well, I think what's happened over the years is that all the money has been sucked out of the real economy. So if you look at small to medium-sized companies, they're 50% of GDP. It's half the economy. It's an enormous amount of economic activity. And it's in the UK, it's 98% of the private sector workforce. So nearly everybody works in a small to medium-sized business. So when you hear the CBI bitching and moaning about Brexit, for example, they don't represent business at all. They represent, Tesco's and Prudential and the largest companies in the UK, and they only represent 2% of the private sector workforce, and aren't that significant in terms of the real economy, where people are employed and things happen. And so what we wanted to do is, derivatives, I'm sorry to say, what we're talking about here and that we invest in, have become such a perfect product for investors, because they're liquid. You can get in and out.
It's easy.
They have scale. You can go and deploy 100 million into derivatives or 1 billion into derivatives and don't bat an eyelid. Whereas you try and deploy 100 million into small businesses, you'd have to do due diligence on 100 companies, and then all the management that goes with that. So they suffer from scale, they suffer from liquidity, and they suffer from their risk profile, because a single small business is quite a risky endeavor. So what we do is we put a portfolio of them together so that the risk is now lower because it's a portfolio of businesses that are diversified across countries, currencies, and products and services. We have liquidity because we're a fully reporting public company, and we have scale. You can deploy a decent amount of money into us because we're now bigger. And that scale also helps the businesses in the group. They can go pitch for bigger contracts and do more interesting things. Now, I actually think that what that does, the side effect of that, is it creates small business as an asset class. Because at the moment, if you look at the top 500 asset managers in the world, and you look at their investment portfolio, they pride themselves on their diversification. They're in every asset class you can imagine, even fucking Bitcoin is in there in the $93 trillion the top 500 asset managers control. And of that $93 trillion, they have a Bitcoin allocation, but not a small to medium-sized business allocation. And yet small to medium-sized businesses are half the economy and 98% of the workforce. So it's like there's an economy over here where all the money is, and then there's an economy over here that employs all of the people and fixes everything. I mean, your lift engineer, your elevator engineer, your cleaning company, facilities management, all that stuff. Your grass is being cut by these small to medium-sized businesses, but they're completely detached from the global economy. So I think if we create an asset class that they can invest in, because at the moment, when they're faced with the choice of do I just buy more derivatives or do I invest in small business? Well, investing in small business is impossible for the reasons that I've stated. So it just goes into derivatives. And that's why the derivatives market has ballooned over the last 30, 40 years to the point where most banks have more derivatives on their balance sheet than the GDP of the country they're in. The derivatives market's 10 times global GDP. It's huge. And so we just want to redress that. We just want to create a financial product that big investors can invest in that gives exposure to small business. And we think that has the opportunity to kind of democratize wealth, to bring money back into the real economy and put it into the hands of small business owners, which we think will be a much better custodian of money than banks. So, that will have a huge positive impact on societies and people and, local communities.
Try and see how we can get some of that Fed printing into the real economy.
Yeah, exactly. Yeah, well, let's make something big enough they have to buy us. So that's basically the game.
It makes a lot of sense. I wonder whether you can write options or we'll be able to write.
We can't at the moment, but certainly when we're big enough and we have the liquidity, then there would be an option market for our shares. But yeah, right now market cap's too small, and we're getting there. Our goal is a billion market cap in the first 3 years of operation, and we're 1 year in. It's a very doable goal. And at a billion market cap, you're in the kind of top 500 UK companies, and ETFs and things start to have to buy you.
So do you have different industries in that one listing, or
so it's kind of like a mini Berkshire Hathaway. So lots of different industries run autonomously by the founders, and at the moment there's 4 key verticals. So we have healthcare, education, leisure services, and construction services. So, but we will add other verticals, and we'll do other things in there as well. That'll be quite,
No, cool. Are you going to ever consider rolling all of them, doing a few of them, and then rolling them into an ETF or anything?
Possibly, yeah. So, I mean, we will do some industry-specific, we call it agglomeration. It's our own trademarked kind of governance structure for putting these groups together. We will do more deals in industry verticals, as well as the core MBH, which is kind of any type of business. So we're hoping to have a pretty big impact with this. We've been doing it for the last 4 or 5 years now, and this is the culmination of that 4 or 5 years work. And we now believe we can really have a big impact with this.
That's fantastic. That's fantastic. So again, anyone who, unless there's anything else you want to mention.
No, I think that's good.
Anyone who follows me wants to get Jeremy's book, I highly urge you to get Jeremy's book, because if you're sitting there and you're sort of wondering, what do I do with my life? How about actually helping small businesses, helping entrepreneurs, and allocating your time and wisdom that you've gotten throughout your career to actually creating value for other small business owners? It would be, and for yourself as well. And then you can use that capital and continue working on what we're doing, and our stuff only takes 20 minutes a week, so it's not really gonna, this is just a perfect addition to it. And I'm telling you, it's something that I will be moving into as my career goes forward as well. So definitely check it out. They just got to go to jeremyharbour.com, right?
Yeah, jeremyharbour.com. Harbour is spelled the British way, so Harbour.
The right
.com.
way. It's spelled the right way.
It's spelled the correct way, yeah. So, and then you can click on the book, Go Do Deals, or you can just go to / Go Do Deals and go through to that. But yeah, that would be fantastic. And you know, the people in my community that have always aspired to that private banking community thing and are on that journey, but perhaps want to start generating the income a bit sooner, then jump onto Minesh's website, which was
perfectportfoliollc.com.
perfectportfoliollc.com, and yeah, have a look at. I think we've got a series of webinars on the different asset
classes.
Yeah,
we work with three. We work with 3 asset classes: stocks, real estate, gold, and silver. And we've got a free training on each one of those, and you can learn about how our strategy works and figure out whether it's something of interest to you or not. So yeah, it's super simple.
So fantastic. I highly recommend you check it out. As you know, as everybody who follows me knows, I talk about you know, the option strategies that I use quite often, and so I think this is a great sort of entry point and way for people to understand it in a bit more depth. So Minesh, thanks so much for your time and great.
Thank you. Yeah, you as well.
A couple of times in the past, we've never had a proper chat.
We've never had a proper chat. Yeah, no, this is awesome. Thank you very much for your time.
Thank you. So let's hit the record button.
Let's, where is that? There we go.